Good evening, guys. Welcome to my channel Learn Accountancy with Prasad R. Today we will be discussing about modern rules of accounts. In the previous video that I uploaded in YouTube, we discussed about golden rules of accounts and we discussed about how journal entries are formed under golden rules of accounts. In this video, we will be discussing about modern rules of accounts and how the journal entries are formed under modern rules of accounts. Very, very important, guys. And this happens to be my favorite rules of accounts also, whether you are in your academic life or whether you are in your professional life after academics. This rules is going to stay with you forever in your life. So stay with this content, follow me and understand these rules. In the next 15 minutes, I will try to make debits and credit look very simple to you guys. In case of modern rules, there are only two rules, guys. One for assets and expenses, another for liability, income, capital and reserve. Rule number one, type 1, whenever asset and expenses increase, whenever assets and expenses increase, what we have to do? We have to do debit. Whenever assets and expenses decrease, what we have to do? We have to credit it. Rule number 1, asset and expenses, if they are increasing, debited. Assets and expenses, if they are decreasing, credited. Liability, income, capital and reserve. Liability, income, capital and reserve, whenever they are increasing, credited. Whenever they are decreasing, debited. Clear, guys? Very simple. Let's repeat again. Asset and expenses increase means debit. Asset and expenses decrease means credit. Liability, income, capital and reserve increase means credit. Liability, income, capital and reserve decrease means debit. I will be taking lot of journal entries. So by end of this session, you will be very clear on how to apply this rule. So let us try to understand how these rules are applied. Step number 1, identify the accounts involved. See, whenever we talk about journal entry, there is a debit and credit. So identify which are the two accounts involved. Then identify the nature of accounts. Nature of accounts means whether it is an asset, whether it is a liability, whether it is an income, whether it is a capital or whether it is a reserve. Identify the nature of accounts. Step 3, apply modern rule. If asset and expenses they increase means debit, asset and expenses they decrease means credit. Similarly, liability, income, capital and reserve increase. Up arrow means increase. Increase means what? Credited. Liability, income, reserves and capital, if they decrease means debited. Only two rules, guys. Clear? Now let us try to understand these rules better with the help of some journal entries. Clear? The first journal entry, Ram started business with capital of 1 lakh rupees. Which are the two accounts involved, guys? Cash account and Ram's capital. Okay, let us understand it better. Cash will fall under which category? Asset. When Ram is starting business with capital, Ram is separate, guys, business is separate. What happens from the business point of view, you have to think actually. When Ram is introducing capital into the business, what happens to the cash in the business? The cash in the business will increase, and when the cash in the business will increase, what we have to do? We have to debit it. Asset increase means what we have to do? Asset, when it is increasing, what we have to do? We have to debit it. Capital, what happens to the capital? When I'm starting a business with capital, the capital in the business will increase, right? Capital in the business will increase, and when capital is increasing, what we have to do? We have to credit. Entry will be what? Cash account debit to Ram's capital account. Why cash is debited? Because asset is increasing. Why Ram's capital is credited? Because capital is increasing. When capital is increasing, we have to do credit. Clear, guys? This is entry number 1. Entry number 2, furniture purchase for cash. Two accounts which are involved. One is furniture, another is cash. When I purchase a furniture, what happens? My asset will increase. When asset will increase, what I have to do? I have to debit it. Cash is also an asset. When asset is decreasing, what I have to do? I have to credit. So two accounts which are involved. Furniture account which is increasing, what I have to do? I have to debit it. Cash account which is decreasing, what I have to do? I have to credit it. Entry number 2. Clear, guys? Now discussing the third entry. There is a loan taken from bank. Now two accounts which are involved is bank account and bank loan. When I take a loan from the bank, what happens, guys? When I take a loan from a bank, what happens? The asset increases, my bank balance will increase. At the same time, I come with a liability at home. The liability also increases. When asset increases, what we have to do? We have to debit it. And when liability increases, what we have to do? We have to credit it. So asset, this is an asset which is increasing. We have to do debit. And bank loan is a liability which is decreasing. So we have to do a credit. So entry will be bank account debit to bank loan account. Now, when I get a loan, I will have an interest also. When I get a loan, I will have an interest also. Okay. What happens? When I take a loan, the interest will become an expense and expenses will increase. Whenever I have to pay interest, the expense will increase, and the expense increase means what we have to do? We have to debit it. We have to debit it. We have to debit it. Interest account, we have to debit it. Clear? Similarly, now interest payable means interest is due, but I will pay later. When interest is due and I will pay later, what happens? My liability will increase. My liability will increase. When liability will increase, what I have to do? I have to do a credit. When liability will increase, what I have to do? I have to do a credit. Okay, and liability increase means interest payable will be credited. Clear, guys? So expense increase means debit. Interest account is expense. Expenses increasing means debited. And liability, what happens? Liability is also increasing means credited. Clear, guys? Now next, now this interest payable, I have to pay this interest now, right? I have to pay it. I cannot keep this interest forever with me. I have to pay this interest. Okay. Entry will be what? When I have to pay this interest, entry will be two accounts are involved: interest payable and bank account. And interest payable, when I pay this interest, my liability will decrease. That means I have to do a debit, and my asset will also decrease. My bank balance will reduce, so asset will also decrease. Entry will be interest payable account debit. Why? Because there is a liability which is decreasing and I have to debit it. Why bank account? It's an asset which is decreasing, so I have to credit. Asset decrease means credit. Repayment of loan, guys. Now I have taken a loan, that means I have to pay the loan also. Entry will be what? Two accounts which are involved is bank loan and bank account. Okay. Now bank loan is a liability. Liability is decreasing. When liability is decreasing, what I have to do? I have to do a debit. Okay. The bank loan account will be debited. And bank is what? When I am going to repay the loan, asset will decrease. Asset will decrease. Decrease means credit. So why bank loan is debited, guys? Because liability, there is a liability which is decreasing. Liability decreasing means debit. And asset 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 decrease means credit. Asset decrease means credit. Cash sales, two accounts that are involved is cash account and sales account. Clear, guys? Now cash is an asset, everyone knows. When I do a cash sales, what happens? My asset will increase. Increase means debit. So entry will be what? Cash account debit. Cash account debit. Why? Because asset will increase means debit. Sales. Sales is income. Income is increasing means credited. Income is also increasing means credited. Credit sales to Sham. Two accounts which are involved is Sham account and sales account. Sham account and sales account. Okay. So credit sales to Sham. Asset account and income account. Asset account and income account. Okay. Asset is increasing and income is also increasing. So Sham account will be debit, and in the next slide it will mention to sales account. Entry will be Sham account debit to sales account credit. Clear, guys? So far good? Okay. Now rent paid in cash. two accounts which are involved is rent account and cash account. Okay, rent is what? Expense. When I have to pay rent, my expense will increase. My expense will increase means what I have to do? I have to debit it. Rent account will be debited. And when I have to pay rent, my asset will decrease. When asset will decrease, what I have to do? I have to credit it. Rent account debit to cash account. Why rent is debited? Expense increase means debit. Why cash is credited? Why cash is credited? Asset decrease means credit. Clear, guys? Now, rent outstanding. Two accounts which are involved is rent and outstanding rent. Okay. And rent is what? Expenses. I am not able to pay the rent for this month, but I have to record the liability, right? Because I have enjoyed the premises on rent, so I have to pay the liability. So my expenses will also increase and my liability will also increase. When expenses increase, what we have to do? Debit. Rent account will be debited. And when liability increases, what we have to do? We have to credit. Accounting entry will be rent account debit to outstanding rent. Why rent is debited? Expense increase means debit. Why outstanding rent is credited? Because liability increase means credit. Clear, guys? Are you with me? Sales return from Sham, 1 lakh rupees. Sales return and Sham. Two accounts which are involved. See, when I do a sales, entry will be what? Sham account debit to sales. Now, when the same sales is returned back to me, entry will be opposite. Entry will be opposite. Okay. So my income will what happen? My income will reduce because the sales has got returned. When income will be reducing, income is reduced means debit. And Sham was an accounts receivable for me. My accounts receivable asset will also decrease. Now he is not going to pay me. Asset accounts receivable also will decrease. So when asset will be decreasing, what I have to do? I have to credit it. So sales return account debit to Sham account. Purchase return from Mohan. Before that, let us discuss about purchase from Mohan. When purchase, if I purchase an item from Mohan, what will happen? Entry will be purchase account debit to Mohan account. Why? Purchase account debit, expenses increase means debit. Why? Mohan account is created, liability increase means credit. Now, whatever I made a purchase, I'm going to return it. So what happens? I don't have to pay to Mohan anymore. I don't have to pay to Mohan anymore. My liability will decrease. My liability will decrease means debit. Entry will be Mohan account debit. And purchase return, my purchase was an expense. My purchase was an expense. My expense will reduce. My expense will reduce. When expense will reduce, what will happen? We have to credit it. So entry will be Mohan account debit to purchase return, guys. Okay. Let us summarize this discussion again. Let us go back to the first slide, guys. Okay. Asset and expenses whenever they are increasing, debited. Asset and expenses whenever they are decreasing, credit. Liability, income, capital and reserve whenever they are increasing, credited. Whenever they are decreasing, debited. And always remember, when we discuss the concept of trial balance, I will remind you guys, asset and expenses always have debit balance in the trial balance. Always have debit balance in trial balance. Liability, income, capital and reserve will always have credit balance in trial balance. Credit balance in trial balance. Take any trial balance of any company or take any trial balance from your book, whether it's 11th standard book or 12th standard book, you will find always assets and expenses in the debit side of the trial balance. You can check this, guys, today. And in the liability side, you will find only liability, income, capital and reserve. Okay. And how to form journal entries? First step is identify the accounts. Identify two accounts. Identify two accounts. Identify two accounts. Step 2, identify the nature of account, whether it's an asset, liability, income, capital or reserve. If asset is increasing, debit it. If asset is decreasing, credit it. If liability, income, capital, reserves are increasing, credit it. If liability, income, reserves and capital are decreasing, debit it, guys. That's all I wanted to discuss in today's class, guys. My YouTube handle, as you all know, is Learn Accountancy with Prasad R, and same handle I have in Insta also. and my LinkedIn is by the name of Prasad Ramachandran. Okay, thank you guys.